After the mass liquidation event that we saw last week, we start with fresh charts to prepare for the week ahead. First, we take a look at Forex Factory to check the calendar to see what events may have large impacts on the markets. Tuesday, Powell will be speaking at 12:20 p.m. Eastern Time. Also, the CPI and PPI economic reports are tentative for Thursday morning. We will take a note of these 2 days and times as trading can be volatile around these events. Ending with a fresh week, we will take a fresh look at our zones. The first type of zones we will look at are pivot zones, which will help mark out bullish or bearish trends based on market structure. First, we will take a look at the Ethereum daily chart. Since the spring run-up, we have 4 distinct zones that were created on the daily chart. None of these zones have been broken. The 2 most recent zones are red, which indicates that market structure has broken down, and is bearish unless these zones are broken. These zones also happen to overlap heavily. Many were surprised that the market crashed, but by looking at these zones, we can see that the market was bearish ever since the first red zone was created on September 22nd. That move broke structure to the downside, and the move all the way to the top of the red zone was merely a setup for a shorting opportunity. One would have to take a look on the lower timeframes and other indicators to take a short, but all these were indeed present for those who observed with this method of looking at the market. On the daily timeframe, an engulfing bearish candle was also a big indicator in itself of market sentiment at the highs of the zone. More recently, we broke structure again, creating the second red zone. Currently, price has recovered and is being rejected at the bottom of the first red zone. This is a spot to start taking a look at shorts. The bounce from the move down already happened, and there was an obvious trade to be taken from about 3,800 to around 4,175. That's not our focus here, though. We just want to take a look at a bit of an overall where the market is and what it's doing on the daily candles. We want to take a note of the newer red zones, as well as the green zone, which is not broken. Now we move in on the 4-hour candles to take a look. These are the zones that were created since the beginning of August. As indicated by the large arrows, you can see that a creation of a zone or the break of one of these zones indicates direction of where you want to take trades. All sorts of strategies and entry techniques can be devised to profit off of these zones. The problem right now is that we've already had a large move, and we don't have a zone to help us pick a direction or to help us with where to place stops for risk control. It's mainly a sit-on-our-hand situation on the 4-hour, and going back to the daily chart, we have zones that overlap, which indicates a bunch of chop might be in order for the time being. There is uncertainty if the CPI and PPI reports even come out or not later this week, which may further prohibit the market from picking a direction for too long. This is where high-leverage traders tend to get chopped up when they swing for the fences for a larger price target. Since we are on a sit-on-our-hands situation for several reasons right now, let's take a look at the 15-minute chart for what was a very nice bounce trade after the big sell-off. On the very far left corner, I'm showing Friday morning for the major sell-off, but there was actually only red sell zones since Wednesday on the 15-minute time frame. Yes, plenty of screaming reasons to get short. Red zones on the 15-minute, a break of green on the 4-hour, and we already knew that the daily also had a red zone. As you can see, the red zones provided the direction and triggers to get short. Ethereum developed a sloppy channel, but once a green zone was created and once a red zone was broken, it was game on for the bounce to rally. Where did this rally immediately go to? Right back to the bottom of the daily red zone that was previously created. There are actually other types of zones that we want to incorporate into the trading, but the goal for now is to show the power of these green and red zones. There is a bit of a special sauce in how these zones are created, but it's very, very basic fundamental market structure that we are looking at. Market structure is the basis of all trades, as well as proper risk management. I think I'm going to call it here for this intro video, but a lot more to come. These types of zones will be featured for different assets, as well as the next type of zone to be discussed, which is based off the volume profile indicators. Also, we can dive into other charts by different TA experts. The goal here is to make some money, and to stay one step ahead of the markets. Proactive instead of reactive. Knowing where we are at in the markets, and where the market is most likely to go to next, is the name of the game here.